Hey everybody, welcome to Mortgage Today for Monday, September 18th, 2023, and oh, what a day it was. MBS started the week pretty much flat this morning. Bonds began the overnight session in moderately weaker territory, although it looked significantly weaker at times due to the market holiday in Japan. The problem was exclusively seen in cash treasuries, not futures, which actually were trading, as opposed to just having bids entered electronically by a fat-fingered broker. Once European traders started participating, cash treasuries moved in line with futures and all was relatively well. Bonds were just a bit weaker into 9 a.m. but recovered somewhat at the 9:30 a.m. NYSE open. U.S. stock futures fluctuated after Friday's sell-off and as oil neared $95 a barrel, highlighting inflationary pressures just as policymakers prepare for interest rate meetings. The big event this week will be the FOMC meeting on Tuesday and Wednesday. The consensus seems to be a hawkish pause where the Fed maintains the current Fed funds rate and signals one more hike with the dot plot. Investors will also be looking for cues for when the Fed will start cutting rates. Hint, in my mind, no time soon. The Atlanta Fed's GDP Now index sees Q3 growth at 4.9%. which seems way out of step with most economists are closer to 3, but the 3 is also really high. After last week's economic data ebbed and bonds sold off with Europe on Friday, we knew we'd likely be waiting until Wednesday's Fed events for the next significant bond market input. That leaves the path of least resistance as a generally sideways range just under the long-term high yields. AM trading was weak enough to approach those highs without breaking them. The 10-year high today was 4.358, not the 4.415 seen on many charts, due to reasons discussed earlier on our post. The rest of the day was spent rallying calmly back into range, but not forcefully enough to be interesting. MBS closed up 18 basis points on the day, closing at 98.22 on the 5.5 bond. We are in the lower bounds of a narrow range with the 25-day moving average just below us at the floor and a Fibonacci line at 98.601 on the ceiling. So we're going to have to see what news comes Tuesday and Wednesday, but mostly we're looking at the Fed on Wednesday.